Welcome everybody, and thanks for everyone who was on time. I super appreciate it. We still have people trickling in, so you might hear me welcome people again. I'm Katie Brim. Today's workshop is on the micro farm program, and this is hosted by Farmer Campus, the Kitchen Table Advisors, and the Community Alliance for Family Farms. My co-founder of Farmer Campus is here as well, Natalia Pinzon. If you want to wave, Natalia, and say hi. We are a community-driven learning network, which means we're designed by farmers and for farmers. We specialize in targeted multimedia education for farmers. We really look at what barriers are keeping farmers from farming and focus there. We're serving farming communities highly in the western region of the United States, but also around the world. I also wanted to welcome our co-hosts from KTA, the Kitchen Table Advisors. If you want to wave, thanks so much for being here and for being co-hosts. We also have the Community Alliance for Family Farmers, Grace Perry, you can wave too. We'll have them around through the whole webinar if you want to ask questions to any of us. And I will share links to them as well during this call so you know who they are and if you want to ask targeted questions for them. So again, just some housekeeping really quickly before we get started. If you could just keep yourself on mute throughout the call and unless you need to speak. So you can either raise your hand using the feature at the bottom of your screen, but also please use the chat feature, put questions throughout. We'll pause as questions come up. We'll also have a lengthy Q&A at the end if you have questions then. We are recording this morning, so if you're uncomfortable with that, please keep your video off and you can just use the chat rather than talk. However, if you are comfortable with that, we'd love to see your faces. Keep your video on, just try to keep the background a little non-distracting location. And again, I'm Katie Brim. We're so glad to have you here. And I'd like to welcome Catharine Anderson, who is a risk management specialist at the Risk Management Agency in Davis. And I'm going to let you introduce yourself a little bit more, Catharine, and take it away.
Yeah, I'm Catharine Anderson, and as she said, I'm in the Davis Regional Office. I've been a risk management specialist almost 17 years. And in our office, what we do is we have a number of people who we all specialize in different crops. So if you call in with a question, you might get farmed to one of my coworkers, and they'll be the ones that'll best help you. Are we ready to start with the presentation?
Great, yeah, and as I said, everybody go ahead and use the chat feature for Catharine. We'll pause at the end for Q&A, but you can also just ask as things come up. And thanks, Catharine. So can everybody see the screen that she's sharing? Any issues before we get started? Great, all right, let's get into it.
Okay. So as you know, we're going to be discussing the microfarm pilot policy. Let's see, how do I, that's what I need to know. How do I get the,
so you could probably just use the arrows at the bottom.
Yeah, there we go. Okay. So what we do is we administer the federal crop insurance program in the Davis area. And we serve the areas of Arizona, California, Hawaii, Nevada, and Utah. And our goal is to help farmers choose effective risk management tools to achieve financial stability. We also provide outreach to help farmers with risk management tools. And let's see, there we go. So crop insurance has a unique delivery system through a public-private partnership. The public side, being the government through RMA, is responsible for developing and maintaining federal crop insurance policies. This includes determining the rates, prices, and yields for each crop at the county level every year. RMA is also in charge of compliance to prevent fraud and abuse. Independent crop insurance agents sell the policy to farmers under approved insurance companies that underwrite the policies and settle the claims if there's a loss. The federal government subsidizes the premiums to reduce the cost of crop insurance for farmers and reinsures the private insurance companies to share the cost of the claims. If multiple peril crop insurance was sold only at the private sector, it would not be affordable. So this gives you a little bit explanation of the relationship that we have with the private insurance companies and how we work. So why should you consider getting federal crop insurance for your farms or ranch? It may help you stay in business after a severe weather event, low production year, or low prices. It provides some beneficial financial, it provides some financial stability and may improve access to credit. Could make a difference between staying in business or going out of business after a disaster. Some banks actually, if you go to them and you want a loan, they require that you have crop insurance. So that's something for you to keep in mind when you're trying to get a loan from a bank for your operation. Oh, wait a minute. There we go. So before I go into the microfarm program, I want to give you a brief history of the program that it is a part of, and that's the Whole Farm Revenue Protection, commonly referred to as Whole Farm or WFRP. Whole Farm was established in 2015, and it was designed to cover the gap for crops that don't have a multiple peril crop insurance policy. Coverage is available up to 8.5 million. It's a revenue policy that covers all the crops on the farm. The grower cannot pick and choose which crop to cover. And it relies on Schedule F tax records to determine revenue and losses. And it's available, it's the only program that we have that's available in all states and counties. The microfarm policy was designed based on research required under the 2018 Farm Bill. The policy development process included obtaining feedback from small-scale and urban producers that have grown products for their local community. The goal was to create a streamlined micro policy intended for local producers under the whole farm design. This new program addresses the key criticisms of whole farm expressed by AIPs and the local food industry, and that was record keeping requirements and allowable expenses, for example, post-production value.
Could you explain what post-production value means, please?
Let's see, just a second here. Wait a minute. There we go. The issue that we had before is that it'll be covered on the next slide, but under the whole farm program, the expenses that were not covered were basically from the field to production. So like if a grower was a small farm, he had let's say a pick and pull, any of those expenses that he acquired were not covered. So what we did is, you'll see in the next slides how that was changed under this new program.
Thank you.
So as I said, this is offered through the Whole Farm program and is available to producers who have a farm operation that has an average allowable revenue of 100K or less for new insureds and 125K or less for carried over insureds. So there's no carryover insurance the initial year of the program, but on their second year, they must have had microfarm coverage the previous year. If the revenue exceeds the limits stated above, it will be capped at those limits and all revenue will be considered revenue to count. And the reason why they chose 100,000 is that they found that it captures 85% of local food producers. To be eligible, you must have at least 3 years of consecutive tax records. For 2022, it requires tax forms from 2019, 2020, and 2021 for calendar and early fiscal filers. They will use a Schedule F, or the insured can create a substitute Schedule F. It's available in all states and counties, just like Whole Farms is, and all coverage levels will be available in 5% increments, going from 50% to 85%. Insureds are not required to report expenses, and individual commodities are not required to have separate expected values or expected yields. That was the part in the whole farm, is that everything was separated out, but that's not the case for microfarm. And it's ideal for an urban farmer. Consolidated tax sales records can be used. 3 years of sales records are required. Replant payments are not available, and industrial hemp provisions are still applicable for the micro program. So what it does, the benefits, is that it minimizes underwriting and record keeping requirements. There's no expense reporting. There's only one commodity code. And this is where producers can include post-production cost activities as revenue, such as canning, freezing, processing, and packaging commodities, or value-added products like jam. So this is a huge deviation from the whole farm program.
Hi, this is Jemiah again. I've got a question on that slide, please.
Yes.
So just to clarify, if my team grows strawberries and needs to jam them, we would count the cost of the jamming as revenue? Is that what I understand?
It could be. It really will depend on how your taxes are done. So that's something that you'll really have to talk to your tax person and how you separate everything out, but it could be.
Thank you.
Okay. So you must provide contemporaneous records that document the sale of commodities sold to determine allowable revenue on the Schedule F. So everything comes back to how your Schedule F is created, and what kind of bookkeeping that you do on your Schedule F. The sales records must provide a total value for the commodities reported on the final farm operation report. So that'll be a report that you do at the end that determines what your commodities are and your value. So producers are ineligible for this program if they are vertically integrated and they have a commodity that is insured by another policy under the Act. So if you have another MPCI policy, you cannot have insurance, though you can have NAP insurance with FSA, but you can't have another MPCI policy. And it's not available for expanded operation considerations, and replant payments are not available.
Catherine, can you
Yes.
try to define acronyms especially for the recording and translation? So not everyone might know what the NAP program is.
Let's see. To be honest, I have to look that up. I'm used to using the acronym. I'm sorry.
Okay.
It's an FSA. It's an FSA program.
It's the non-insured crop disaster assistance program. So it's if you are impacted by a disaster on your farm, there's a program specifically for disasters. So you could participate in that program and still qualify for this insurance, correct?
Correct.
Okay.
You just don't qualify for any RMA programs.
Okay.
So we have special circumstances that are in the whole farm program, but they're not applicable to micro farms. So we want to make sure you understand that organic commodity requirements, post-production operations and added value, animals and animal product requirements, nursery, marketing contract requirements, expanded operation requirements, and direct marketing commodity requirements. So there's that whole list is part of whole farm, but it's not included for micro farm requirements. So microfarm is available for the 2022 crop year, and the sales closing date for Arizona and California is February 28th. So that's coming up in a few weeks. Hawaii, Nevada, and Utah is March 15th. The revised farm operation report is due on July 15th, and the contract change date is August 31st. For those of you that might be new to crop insurance, the coverage period is defined as the time during which coverage is available against loss of production of the crop because of an eligible natural disaster. It starts when crop is planted or within 1 day of approved application for coverage. It ends on harvest completion, established normal harvest date, abandonment, or total destruction of the crop. So each crop is different, but these are the general guidelines. You should contact your local FSA county office for more details regarding your particular crop. So what causes a lost payment under microfarm? It is when there's the natural causes of loss of insured revenue due to unavoidable natural causes during the insurance period. So these are going to include adverse weather conditions. And as you know, we have a lot of those in California right now. Fire, earthquake, volcanic eruption, insects or plant diseases, but not damage due to insufficient or improper application of pest control or disease control measures. Failure of irrigation water supply, if caused by an insured peril that occurs during the insurance period. Wildlife, unless control measures have not been taken, or in accordance with subsection D and E of the whole farm policy, a decline in the market price. So revenue for the year will be determined using tax records for the insured year, farm information as to what was produced, information about inventory, what hasn't been harvested or sold, etc. So taxes must be filed for the policy year before any claim can be made. When revenue to count for the policy year is lower than the insured's revenue, a loss payment will be made. So this is something important for you to understand. Unlike the multiple peril crop insurance program, where you get paid after your claim is processed, the whole farm and the micro farm, you must have, say you had a loss, let's say in August, and the claim is processed, but you will not receive payment until your taxes are filed in the following year. And I believe that California Farm Link is still offering bridge loans to help out farmers who find themselves in that position of waiting to file their taxes and needing the money because they've had a loss. So that's what makes this program different from the multiple peril, is that it really depends on when your loss occurs and when are you filing your taxes, whether you're normal tax or late or early. So that's probably the downside on a loss, if there is any. But then again, like I've explained to people, some insurance is better than nothing. If you didn't have this program, even though you might have to wait to get paid, you still will get paid, even though it may be delayed from when you had your loss.
Catherine, thank you. This is Jemiah again. will there be a verification of the amount to be paid before taxes are done? Or will that still be unknown by the time we need to do the taxes and that be verified afterwards?
Well, we have to see your tax records, and you will know pretty much what you're going to get because you're going to be basing it on your tax records, but those amounts could change because your tax records do indicate, it's based on the Schedule F. So you could probably, if let's say you had a loss in August, you could probably get an idea of what it's going to be just doing a quick Schedule F, and that should give you a good estimate. But the amount will be determined by your Schedule F on what your actual loss was.
Thank you.
So when you have a loss, you must submit a notice of loss within 72 hours after discovery that revenue for that policy could be below the insured revenue, and inspections might be required. And so that's really important. You need to make sure you do contact within 72 hours or you may not be able to collect. So I'm sure a lot of you are saying, well, what's this going to cost me? So I wanted to show you where you can go if you would like to get an estimate of what this program will cost you based on your farm revenue. So, and down below I have the link. But in this example, I'm using Fresno, California, and I'm just going at the max of 100,000 max as my example. So you'll go there, you'll put in the commodity, you'll fill out that information, and what will happen is then you'll end up getting, I'll show you on the next slide, you'll end up getting what the cost would be at each coverage level. So going from highest to lowest, so if you have 100,000 in average revenue, and let's say you're going to choose the 85,000 liability, your total premium is 13,770, but what you're going to pay is 6,059. The difference is a subsidy that the government pays. And so you can see that because of the government subsidy under the 85, the insured is only paying less than half. When you jump down to the 80%, you can see that the premium is 12,000, and the insured is only paying about 25% of that premium. So this is where, having the government subsidy makes a big difference. So even if you go at 50%, your total premium is $6,400, but you'll only be paying $1,280 for $50,000 of liability. So this is what our RMA homepage looks like, and I have the list listed below. And this is where you would go to get more information. So on the next slide, you're going to go. So you'll see here, and you're going to go to the Tools tab. And under the Tools tab, you're going to be able to find the cost estimator that I just showed you, agent locator, and actual info browser. Now, under the agent locator, this is where you can find an agent to service you. So we cannot recommend an agent, but we suggest you talk to your peers to see who they have and what kind of job they're doing for them. The prices that are charged by the approved insurance providers are determined by the Federal Crop Insurance Corporation, and an agent cannot offer a better price should you choose them. What they can offer is possibly better service. So it's important that, I think, if you have any peers that are using certain agents, to talk to them and see how they like them and whether they're doing a good job for them. Also, just to let you know, because this is a program that relies on taxes, though all agents are supposed to offer this to you, some might be hesitant because they're not comfortable with taxes. So I think if you can find someone in the peer group who maybe has whole farm who has an agent that they're familiar and they're comfortable, that might be another way to go. But all agents should offer this program to you, but you know, it becomes an individual decision on your part on who you choose. Oh. And then we have what we call the actuarial information browser. And this is also where you can get additional information on your own. You don't have to rely on an agent for this because this is all public. But this gives you the types of practices. And right now we have calendar year filer as a type and early fiscal. And next year they'll be adding late fiscal filer. We just don't have that right now. And then you see there's tabs that tell you the dates. So if you're questioning, you know, if you can't get a hold of your agent and you're wondering, you can go to the dates tab and it will tell you what due dates are, the rates, options. And if we have any special provisions, which sometimes are deviations to the program or additions to the program. So also we have the fact sheet, the national fact sheet that's the link for that. And then there again is a link for all the agents. So do you have any questions?
Thanks so much, Catherine. People can go ahead and just unmute yourself and ask questions if you'd like.
And then here is our contact information.
I'd also welcome KTA and CAF if you have anything you want to add to the presentation or resources you want to share, please go ahead.
I'd like to ask a question. Are any of you interested in getting this program?
I guess, you know, one other question, then I'll step back and let others ask. The emergency, I guess you framed it a catastrophe when things go wrong. You know, naturally, the irrigation systems are a big part of that. And we do our best to have staff ready to fix problems so things can keep growing. But would that be something covered? You know, if our in-ground reservoir, you know, if we have an earthquake and it breaks the reservoir, spills down the street and our nutrient water is gone and various issues occur, would that be an issue that we could cover? And also severe drought. I noticed that's not on the list. Severe drought is natural to all the states listed there, and happening worse. So is that considered an environmental or weather related catastrophe?
Well, it is a natural disaster. As each year, you know, RMA makes decisions on what is covered and what isn't. If, you know, what is actually like failure of irrigation, is it really because of a drought or is it for some other reason? You know, there's a difference between irrigation, a failure of the system because there's issues within the system, you know, like maybe not proper maintenance, that wouldn't be covered. But I don't want to say yes or no. It's going to be probably a case-by-case situation.
Of course.
You
Thank
know,
you. Thank you so much.
Thanks so much, Jemiah. I'm gonna, Catherine, we have a question from Kaylee asking to clarify, is this for crops only and not livestock or livestock products?
No, livestock and livestock products are included in this.
They are, yes?
Yes.
Okay, great. Kaylee, did you want to expand at all on that? Take that as no. Thank you. All right. Any other questions?
I have a question. Hi, my name
Hi,
is
Shonda.
Shonda. Hi, how are you? Thank you so much for this presentation. I have a question. Due to the drought, we were, my farm, I'm from Bucks Happy Farms in Lucerne Valley, California. Hello. And we were, because of the drought and because of the heat, we got attacked by the wildlife. So I lost livestock because of that. Would that be something that would be covered under this?
It's possible, without seeing your whole operation, I just can't come up and say yes. That would be something I'd have to research,
Okay.
and I could do that for you to find
Okay.
out.
All right. Okay.
I have my email address there, so if you would like to send me an email with your particular issue, and then I could do some research on that.
That would be so wonderful. Thank you so much.
Yeah, I don't want to just say yes or no because I don't know the answer completely, but I can do some research and see what they would say.
Okay, thank you so much, Ms. Catherine Anderson.
But you guys have my contact information, so if you have any questions, please feel free to drop me an email. I am the whole farm subject matter expert and now micro farms. So if I don't know the answer, I know the people I can go to get the answer.
Thanks, Catherine. We have another question in the chat from Micah or Mika. Are the RMA products federal subsidies impacted at all by producers' practices? So regenerative ag versus, actually don't know what SGM is, or other climate smart farming practices? And feel free to
No.
expand, Micah.
The subsidies, those are set. So I'm not aware of, just because you do something different, you might get more subsidy or less subsidy. What is important to us though is that you use good farming practices. So, there are, you can go to the local UC cooperative extension offices to find out what are considered good farming practices for your crop. And that's something that we look at. In the case of a loss, were you giving enough water or not enough water to the land, that you're growing? So that's something that you should check with them. New practices as they come up would have to be, that's an individual thing. If you had a loss, let's say you tried something completely new and it didn't work, well, that might not be a covered loss. If you can't get substantiation from the cooperative extension or farm service agency as a good farming practice.
Thanks, Catherine. Susie asked, is there a sample policy with a list of exclusions?
That would be something you would need to get an agent and talk to them. We do have the fact sheet, and the policy is listed there on the website, but I don't know of any other exclusions.
Thanks. And then Raphael, I'm not sure I understand your question. What will all new micro farmers then? Would you mind asking that? Just go ahead and unmute yourself and ask or clarify in the chat, Raphael Rivera.
And just so you know, this is a new program that we're rolling out, and I might not know all the answers, but I will definitely find the answers, since it is a little bit different from whole farms. And it'll probably be subject to some changes and tweaks as we go along.
Catherine, on that note, how open is the agency to feedback in this first year of the launch program?
Very open, very open.
What's the best way to provide feedback and
send me an email.
Great.
Yeah, because any questions or things that you think, I will pass on to the Kansas City office. So I will pass them on to the team that is overseeing this product.
Okay, that's great. There's a lot of agricultural service providers in this call. So it's really helpful to know that if any of your producers and growers that you serve aren't having, if it's not working for them for some reason, then it could be helpful to be in touch with Catherine and provide feedback or explore other options that might be more relevant for those growers.
Right, and just to let you know that that follows true for all our programs. You know, I had a mint grower that was doing a certain practice, and we didn't have it in our policy or as a way to, it was considered not a good farming practice, but it turned out that once we got information from the UC Extension Office that it was okay. And so, you know, we want to make sure our programs are relevant for all our crops to how you are growing things, because things do change over time. Now, that doesn't mean that we can make changes immediately, but it does mean that we want to know what those changes are. And we will do our best to try to service our growers. You know, our Davis office, we're really concerned about our growers, and we really want to have an open door policy with all of you to make sure that we make programs that work for you. You know, we might not be always successful, but I can tell you that we try very hard to make sure that happens.
Thanks, Catherine. Could you remind people when they need to sign up by? And then we have another question here from Raphael.
For California and Arizona, it's February 28th. And for the other states, Hawaii, Nevada, and Utah, it's March 15th.
Great, thanks. Okay, so then from Raphael asked, new micro farmers without 3 years of taxes, how will they have access to insurance?
Well, they're going to have to start either, if they've not done Schedule Fs, it's possible this is where you would need to get an agent. It's possible if they have the records that they could create substitute Schedule Fs, but they would have to talk to an agent to see if that's possible. Otherwise, it means that right now, you know what the program is, and you start, you know, getting that information going forward, and then in 3 years, you'd be eligible. But it's possible, you know, based on your tax records or your Schedule Fs, or you could create substitute that it might work, but you're going to need to talk to an agent on that. I can't tell you right offhand, yes, you would or wouldn't be eligible.
Raphael, did that answer your question enough? Or do you have any follow-up?
Yeah, it's really important for you to reach out and get an agent so that they can go over the details of your farm operation, because I don't have that information, and it's, you know, they're the ones that are going to be the ones that are best help you.
And remember, when talking to your agent, to emphasize that this program exists, because some agents might not be
even aware of it because it's
aware
so
of
new.
it. Yeah.
I mean, I think they're probably all aware of it, but they may not be aware of all the particulars. So, but you know, like I said, I think our job at our office is to try to meet the needs of our stakeholders, which is all the farmers. And so we want to make sure that we do a job that meets your needs and a program that works for you.
Great, thanks, Catherine. I think Natalia might share another poll. I see some people are starting to sign off just to get an idea of how this went. Are there any more questions from the group?
Hi, Catherine. This is Wendy with Kitchen Table Advisors. First of all, thank you for the session. It was very informative. I just want to hop on to that last piece about the agent education program. And I know you mentioned earlier that, you know, there's agents who are maybe less comfortable with like this tax-based policies. Is RMA planning any like resources or tools for agents to, you know, be better informed about, you know, these newer policies?
The agents are trained by their approved insurance providers. We don't provide training to the agents. That's something that's done by the approved insurance providers. So whoever their company is, I know that they have done training. And I know there's been a big push, and there's been a lot of training that's gone on the last 2 months. So they should be aware of it. You know, and I know that as far as I know, I think almost all the insurance providers have made a concerted effort to do that since it's a new program.
Thank you.
So we have Victor just shared some information over in the chat to follow up. I'm going to send everybody out. I'll send everything, all the links that were shared today, as well as contact information. I will follow up with in an email as well. And then if you see Natalia just asked if everybody who's still on, if you could just share in the chat, just write what other future insurance webinars you might be interested in. We're putting a list together for the year. And so we want to make sure they're super targeted and actually what you're wanting. So this could be anything you're curious about around insurance or insurance products or demystifying things. Just please, if you could, before you sign off, put them in the chat so that you can help us better serve you and your fellow farmers, as well as the farmer agencies that are here. Great, thanks everybody. And Micah said, I'd love to hear from farmers who've utilized the whole farm revenue program or microfarm program. I'm wondering if there's anybody on this call that might have done that. So we can definitely organize future topics about this, but if in case anybody knows that, or are there any farmers who've done that, please unmute yourself and share. I'll take that as a no. Yeah, okay, so I'm loving these ideas to have a webinar in which maybe we'll invite some other farmers who've actually used these products, and maybe we'll do a selection of different products and have farmers share their experiences. We love doing farmer to farmer education. So thank you, Julio and Micah.
Since this product or this program is new, we weren't able obviously to invite a farmer, but hopefully maybe next winter we can have someone that went through it this year. Thank you all for joining us and for your great questions. Oh.
Yeah, thank you all. And again, this was Catherine is from the RMA, and then Natalia and I are from Farmer Campus. KTA and CAF, before you sign off, do you want to just unmute yourself and share a little bit about what you do and your resources so people know to follow up with you if they have questions? You know, Grace, maybe Grace from CAF, you can go ahead, and then I'm sorry to put you on the spot, and then someone from KTA.
Hi folks, my name is Grace Perry and I'm with Community Alliance with Family Farmers. We have loads of resources on our website. I think Katie mentioned or dropped it in the chat earlier, and I'm happy to do so again. We work with farmers around food safety, policy and advocacy. We have a small farm tech hub, ecological farming and farm to market technical assistance. And I'm excited to announce that we're launching a wildfire program for farmers, starting more formally next week with our first full-time hire on the subject. So more from us to come specifically around wildfire preparation and resilience. There's some resources on our website specifically about those subjects, but more to come. I'll drop my email in the chat as well in case folks have questions about CAF or want to get connected to us in some way.
And also to chime in there, the wildfire program is in partnership with Farmer Campus, and part of what we'll be doing is looking at different financial recovery options for farmers and ranchers during wildfire and other disaster seasons. So if you want to touch base on that, please reach out to us.
And we're also, the Small Farms Conference is coming up with CAF at the end of this month. I'll share a link to that as well. We'll be co-hosting a wildfire resilience, but looking at community resilience and how farmers and ranchers can be a part of that. It's going to be a collective conversation for solutions. So please join us for that. I'll send information for that. KTA, you want to chime in and just share a little bit about what you do? Anybody? Well, Kitchen Tables Advisors does amazing work. I will share a link to them so everyone can follow up with those resources. It looks like we're done with questions over here. If anyone has any other thoughts of future webinars you'd like, let us know in the chat. You can also follow up. I'll follow up by email, and I'll share our contact information. Here's my email right now. We have robust work in climate and wildfire resilience. Farmer Campus offers online courses and research and a workbook for farmers. And so we were really looking at disaster, and that's why we got into looking at insurance. So so glad to have you all here today. Thank you so much for your time. Please follow up with any questions, and feel free to reach out to Catherine with feedback on this, as well as specific questions that may not have gotten answered today. And I hope you all have a great February. Hopefully see you at the Small Farm Conference to join us for wildfire resilience. And thanks to our partners at CAF and to KTA for being here tonight or this morning. Need more coffee. Thank you, everybody. And thank you, Catherine. You can all unmute if you'd like to say goodbye too.
Thank you.
Thank you.
Thanks, everyone.